welcome to Looking at the Markets with David Modell. Going to talk about potentially a couple of ways that you might hopefully be able to improve your trading with Bollinger Bands. And before I get started, if you'd like more help with trading or investing, you can email me for coaching. I do offer that. The email address to contact for coaching is davidmodell@gmail.com. All right, so let's get into this. And a lot of people, they go to, let's say, TradingView, which is what I'm on right now, and I'm using the BlackBerry stock, ticker symbol BB. I'm using the daily candlestick chart, but what I'm going to say could also be applied to 1 minute candles or 2 minute, 5 minute, hourly, daily, weekly, whatever, because the Bollinger Bands will adjust to whatever time frame you're using. And also, everything I'm saying today does not work perfectly, does not work 100% of the time, so please be cautious, respect your stop losses or whatever strategy you're using to hedge your losses. Okay, so a lot of people just go with the standard default settings, which is usually a 20-period moving average, simple moving average for the midline, and then 2, which is 2 standard deviations above the midline for the upper band, 2 standard deviations below the midline for the lower Bollinger Band. All right, that's pretty standard, but they might get stopped out a lot. And first of all, one way to possibly improve is if that midline is trending downwards, you might not want to take the trade. Okay, you might want to take it only when that midline is either going sideways or upwards. All right, because you're fighting the trend. All right, you're buying the dips essentially in an overall downtrend, which is not recommended. I mean, this thing was starting to go down, and then even before it reached that bottom Bollinger Band, the downtrend started to accelerate. And you could also just look at the candles and see. I mean, it started to really go down hard. So this is a trade that you probably wouldn't have taken if your strategy is to buy at the bottom Bollinger Band and sell at the top Bollinger Band. Then this would not be a trade you probably would have wanted to take. Okay, so a better way to go perhaps would be to, here's an example. You've got it at least going sideways. I mean, up is good, sideways is fine, because you can still trade a range if it's range bound. Okay, it's also nice if the Bollinger Bands aren't super wide, and if they're parallel, and like over here, the Bollinger Bands are not parallel and they're pretty wide, and so you wouldn't want to take a trade if the Bollinger Bands necessarily look like that. But let's say they're parallel and it's range bound, so those are good conditions. And so if you bought at the lower Bollinger Band here, and then waited until it touched the upper Bollinger Band over here, it almost touched it but didn't. But then it touched it over here, you would have made not a bad profit from 967 to 1056. Percentage-wise, that's a pretty good profit for just a matter of days or a few weeks on the daily candlestick chart here. Okay, here's another example. Yeah, this is a perfectly good trade here. You could have bought when the wick, the price touched down here at the lower band, and then because the price action, it was going sideways at the time. The Bollinger Bands were parallel. There wasn't anything crazy going on like over here with the Bollinger Bands, and so you could have taken the trade and sold up here. It would have bought it again 967, sold at 1092, something like that. That's pretty good, not too bad at all. You're kind of rinsing and repeating the range, so to speak. Okay, that's a pretty good strategy. Does not work perfectly, but be aware of that. Okay, so the other idea to help you to improve your Bollinger Bands trading, hopefully, no guarantees, is to consider, instead of using 2 for the standard deviations above and below the midline, consider making that a bigger number, like 3 or 2.5, 2.5. And here's why. And I cannot guarantee these numbers. This is just what I've heard. And I looked it up, and this is from research, but it's not guaranteed. Around 65% of price action is contained within 1 standard deviation of the Bollinger Bands. All right, so the candles are only within the bands 65% of the time if you use 1 standard deviation. Let's see what that looks like. Let's see, you go to settings and change from 2 to 1. And yeah, I mean, the price is just outside of the bands, as you can see, a lot of the time. Way too much. Way too much. All right, so that's not what I'm looking for. So what about 2, the standard default? around 95% of the price action is contained within 2 standard deviations of the Bollinger Bands. So if we put this back to 2, the candles should stay within those upper and lower Bollinger Bands about 95% of the time, I've heard. And yeah, it sounds about right. It's usually within the 2 lines most of the time. So yeah, if you did 1 standard deviation, you would get a lot of false signals. But if you find yourself getting stopped out a lot, maybe consider 3 standard deviations, because almost 99% of the price action, I've heard, is contained within 3 standard deviations of the Bollinger Band. So let's try changing it to 3. And so it's going to be pretty rare that it touches the upper or lower band. But it does. You could buy it there because you're getting a higher quality signal, because it doesn't happen very often, and it really needs to go down to touch that bottom one. All right, and then you could, and it might keep you in the trade longer, actually, also, because you buy here and you're not selling until the thing really, really goes pretty high. You wouldn't have sold here, you would have sold up here. Not too bad, right? Just be aware that you're going to be in the trade longer. If you want to be in the trade not so long, maybe also put the 2 standard deviation Bollinger Bands up there on top of the 3. And, buy when it hits the lower band on the 3 standard deviation setting, and then sell when it hits the upper band at the 2 standard deviation setting. That is one way to go about it, if you don't want to wait so long to sell. All right, because there is risk involved there. If you're going to wait until it hits the top, which is way up there, it might hit the bottom first. And so a perfectly good trade could end up losing, all right, on the 3 standard deviations. So be aware of the limitations here. And also, you're going to get fewer trades. So you have to be very patient with this one. So maybe if you want to compromise, if you want more trades, you can go 2.5 if your platform allows that. Looks like TradingView will allow it. So there you go. Buy here, sell here. You wouldn't have had to wait so long to exit the trade. You wouldn't have had to wait until here. You would have sold here, which is pretty close to here. Not that huge of a difference, and it's much sooner. All right. So something to think about. Maybe change the settings. You're allowed to do that. Check to see what your settings are. Some people watching this might not even be aware of what settings they're using the Bollinger Bands on. There's a good chance it's just 20 and 2, and you never really thought about it enough or questioned it. But you should be questioning everything, really, as a trader. Maybe not everything, but well, yeah. I mean, at least consider all the angles that you can, and see if you can make improvements. Because the name of the game is not perfection, but improvement. All right. So I hope this was helpful. And if you want that coaching, again, you can contact me by email at davidmodell@gmail.com. So thank you so much for watching and for listening. I will talk to you again soon.